Two facts from today do not belong in the same sentence, and the whole session lives in the gap between them. The first, the S&P closed at a record, and it got there by climbing back over the exact ceiling that had turned it away 4 days running. The second, the desks that hedge the index itself finished the day roughly flat, selling premium on both sides straight into that record. This is the Algo Index market close for Thursday, the 13th of August. A record broken above a wall that rejected it 4 times, bought by an index that never showed up to buy it. The number that settles the puzzle is $4.5 billion, and it was not in the index at all. It was single stock call buying, longer dated, one name at a time, and it is the reason the ceiling finally gave way. Here is the board underneath it. The S&P higher by 0.7% to a record close just over 7,800. The Nasdaq 100 up better than a full percent. The Dow barely green, and the fear gauge sitting perfectly still at 14.5. Before the desk and the map, one promise, and it is a single number you were not shown on any chart you had open today. The record you watched print was not bought by the crowd that usually buys records. I am going to show you who did the buying, and how much of it there was, and why that one detail changes what tomorrow is actually worth. That is the whole show. After it, the road into a Friday that opens on retail sales. Start with the board, because the numbers on top are cleaner than the story underneath them. The S&P finished at 7,802, higher by 0.7%, and that is a record close, the first one that sits above the 7,800 line instead of under it. The Nasdaq 100 did the heavy lifting at up more than 1%. The Dow added barely a tenth, and 100 basis points between those two is the whole tell that this was a technology day and almost nothing else. The fear gauge closed at 14.5, unchanged on the session, and for a record close, that stillness is its own quiet statement. No panic bid, no relief unwind, just a market that walked uphill and stayed there. Top to bottom, the day covered 69 basis points. Wider than the grind of the past 2 weeks, but still tame for a session that set an all-time high. Carry one reading out of this board into the rest of the show. The options market is pricing less daily movement than the S&P is actually delivering. More than 2 full volatility points less. And that gap is the foundation the whole protection segment stands on later. Here is the read your screen could not carry. And it is the entire reason the ceiling broke. Take today's flow in 2 layers, because the 2 layers disagreed, and their disagreement is the story. Layer 1 is the index itself. The real-time read of dealer hedging on the S&P swung a full $8 billion across the session, from $3 billion positive in the morning to $5 billion negative by mid-afternoon. And it closed near $1.5 billion negative. $8 billion of motion, finishing about where a flat day would leave it. Open that flow up, and it is almost entirely same-day options being sold on both sides at once. Calls and puts alike. Desks pulling the premium out of contracts that expire tonight, while volatility sat low. That is a market renting itself out by the hour, not one placing a directional bet. Layer 2 is where the record actually came from. Step off the index and down into single stocks, and the same read flips its sign completely. About $4.5 billion of positive hedging, and nearly all of it longer-dated call buying. Not same day, not premium harvesting, real upside bought to hold. So, the index desks spent the day flat, and the single stock desks spent it long, and that $4.5 billion is the hand that shoved the S&P back over its ceiling. The record was bought one name at a time, and the screen you watched only showed you the result. The names line up with the read. Leadership was a single theme, artificial intelligence hardware, and it started overseas. Korean memory makers up better than 5% overnight, dragged a whole semiconductor group up behind them. Cutting the other way, one large networking name fell about 8% on soft guidance. Broad participation was genuine, better than 870 more advancers than decliners. But the horsepower sat in a short row of very large moves. Pull the day up on the chart, because it draws as a clean 3-act story. Act 1, the morning. The S&P opened firm and drove straight to a new all-time high near 7,816, taking out the record on the first real push. Act 2, the midday. It could not hold up there, and it slid for 2 hours back towards 7,785, right onto the pivot that sits inside the day's heaviest traded zone, and that is where the selling ran dry. It never even reached the deeper support down at 7,750. Act 3. The last hour. Buyers took it back over 7,800 and it closed there, on the right side of the ceiling, for the first time in a week. Overhead, the reclaimed ceiling at 7,800 is now the line to hold. Then the record near 7,816, then a heavier band from 25 up to 34. Underneath, 7,785 is the pivot to defend. 7,720 is the character line for the session. And 7,680 is the level that ends the constructive read if it gives way. Watch the reclaimed ceiling before anything else. Holding it keeps the buyers in charge. Losing it hands the day straight back. The single loudest name of the session was Tesla, and it earned the spot by clearing its own levels the same way the index cleared its ceiling. The stock rose about 4%, pushed up through its key gamma strike at 330, and closed above its call side level at 335. And it did it on roughly $1 billion of positive hedging flow, its heaviest reading in a month. The part that makes it a bet, rather than a drift, is the size and the direction together. When one stock breaks two of its own overhead lines on its largest flow in 30 days, that is not a wobble, that is a decision. It is the single stock version of exactly what the whole index did today. And it is why the leadership and the flow are telling you the same story from two different heights. One reading before the desk, and it is the one that decides how you should be leaning. Options on the index are cheap against how much this market is actually moving. 1 month protection is priced more than 2 volatility points below what the S&P has realized, and its rank sits near the bottom of the entire year. But the cheapness is uneven. The premium the market charges for downside over upside is parked near the very top of its year, up around the 98th percentile. So downside cover is the crowded side and the expensive side, even while options as a whole are marked down. The clean way to hold it is this. Owning upside here is well priced, selling volatility pays almost nothing, and the 1 month downside puts, pricey as they are next to calls, still cost less in absolute dollars than at any point this year. None of that is an instruction to trade tonight. It is the backdrop to carry into a Friday, stacked with data. The desk took 4 swings today, and the scoreboard reads 3 wins and 1 loss, with the book flat into the close. The 3 winners were single-leg longs that went with the break, 2 on the S&P and 1 on the Nasdaq, each taken as price pushed higher through the morning, and each closed into strength. The 1 loss was the trade that leaned the other way, a fade set to catch a rejection at the ceiling, and today the ceiling did not reject, it broke. So the fade was simply on the wrong side of the move, and we booked it as the loss it was. 3-1, said plainly. The quieter win never shows on a scoreboard. 3 separate times in the afternoon a chase set up in the middle of the range, and 3 separate times the rule to trade only the best locations kept us out of it. Wins with the break, a loss against it, and nothing donated to the chop. Flat into a Friday stacked with data is the only place worth being tonight. Before the map, the report card on last night's call, because we post our own grades where you can see them. 24 hours ago, the read from this chair was a market boxed in just under 7,800. Constructive underneath, but with a wall overhead it kept failing to clear, and the call was to respect that wall and not to chase it. Here is how it aged. The wall held 1 more session, and then, on a cool producer number this morning, the market climbed over it and closed on the far side. The patience was right up until the moment it converted, and that conversion is today's headline. Now the road ahead. Friday opens on retail sales at 8:30, and the piece to watch inside it is the core line, forecast to swing from negative to positive, because a consumer that has started spending again is what would harden today's soft landing read. At 10 o'clock, the consumer inflation expectation survey lands, and the 5-year line is the one with teeth. With the market still pricing better than a 1 in 3 chance of a rate increase next month, an upside surprise there is the most direct threat to the whole story that carried today. Bias is constructive, but capped. Hold 7,800, and the record near 7,816 is the target. Then, that band into the low 30s. Lose 7,720, and the same conditions start working against you, towards 7,703, and then 7,680. And the part today did not settle. The rally leaned in part on crude, falling more than 2% on the read that the Gulf had gone quiet. After the closing bell, that red was turned on its head. A claim of an attack on 2 vessels in the Strait of Hormuz, and a statement from the Treasury that fresh measures are coming on Iran. both crossing after the market had shut and priced neither. Crude has barely moved yet, but that is a thin overnight book that has not been tested by a full liquidity cycle. If crude opens sharply higher through Asian or London hours, a real piece of today's fuel disappears, and nothing new goes on the book before 9:45 in any case. So do not let a quiet evening session convince you it is already settled. 3 quick things before you go. First, the Algo Index Trading Journal, free for anyone to open at members.algoindex.com/auth/signup. Every trade you write down in it gets marked against the real price that was on your screen the second you committed, so your own record grades itself. Second, if you want to see whether the dealer levels we read out every night actually did their job, held or broke, that scorecard is open to anyone at algoindex.com/tools/gamma level accuracy. Third, the long-form written version of everything tonight lives at algoindex.com/blog. And the traders who take these reads apart in real time all week are together on Discord by invitation. Get some rest. Keep tomorrow's 8:30 retail number in front of you, and I will be back after Friday's close to tell you what it did.